what needs to happen right now, what governments have to do, is to spend an awful lot of money to protect and ensure their economies. The monetary backdrop, what the central bank's doing is, a part of the background, part of the detail. But really what's needed is huge amounts of spending. You've got an economic potential in your economy which could get wiped out if you don't, protect it. That's not a monetary policy issue. That's a fiscal issue. So spend the money now. Don't worry about what the ratings agencies are going to do, because it's not going to be an issue if you've got no economy left once if a vaccine comes through and we start to move back to normal and all your businesses have gone bust and everybody's unemployed. That's not sensible. And the central bank isn't really there to provide that sort of backdrop. It's just providing a little bit of extra help in terms of debt service and also keeping the financial markets from collapsing, which is no longer really a big issue right now. Hence all of these extensions on the Fed policies. Yeah, it's fine, it's great, it's good, but no one's really drawing on them that heavily anymore. It's not needed.
Rob, it makes me wonder, globally then, if fiscal policies don't rise to the challenge with more spending, whether we're going to be worried about a second wave, not as it pertains to the virus, but as it pertains to additional layoffs and bankruptcies, because it almost seems as though companies have been in this holding pattern trying to assess how bad the damage will be. And if stimulus doesn't live up to the task or even starts to wind down, then what happens?
Yeah, well, we're facing that in the US right now. Are we going to see these, sort of paycheck protection plans continued, and in what form? People are talking about stimulus from the US and from Congress right now. I think a better way of looking at this is how much of a contraction is this going to cause. We know that the stimulus programs, the amounts of money that are going to be offered to furloughed and unemployed workers and the supplementary unemployment benefit schemes are going to be lower than before. So to keep referring to this as stimulus, when this is basically a contraction, it's saying to these people, okay, we might give you some more money, but you're basically going to need to take a pay cut. That's not really stimulus in the language that I use. That's contraction. So this is the problem with fiscal policy. Unless you keep on spending at exactly the same pace, it delivers contraction. It squeezes. It's great when you've got it. You've got to be prepared to keep on spending it if you start it. Otherwise, you are going to end up with these sorts of problems.
Rob, I hear you on that, but there is a case to be made that some of the benefits right now, including in the U.S., are discouraging people from going back to work. So what is the right balance here if you want to make sure the incentive structure is there?
Yeah, I would agree with that, but that sort of doesn't really help us. It tells us that perhaps the initial payments were too generous. But where do we move from here? Yeah, it's a discouragement to going back to work. People are earning more out of work than they are in work. But that's the problem that's been put in place. It's not really, there's no real answer to this, is the question. It shouldn't have been done in that generous form. It seemed like a good idea at the time, I guess, for policymakers. But now they're having to live with the consequences of this.